The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, zip code 19174. Folks, let's take a look at this DAX. As you can see here, we're making equal moves off of that double bottom that we had down there. It's acting relatively nicely. Nothing like what we've got going on here in the good old USA. But let's take a look at the FTSE, because that's the one that is under the gun now with the Brexit and all this other stuff that's going on. You'll see that it's having a pretty good rally since September 11th. We haven't just made the 382 retracement here this morning, and I'm not sure what's happening, but we have a lot of things going on that we need to take care of. But first of all, let's continue on with yesterday. We missed one of the stocks that we were following, and that is the Facebook. As you can see here, we were looking at this a week or so ago, and it's a little more than a week or so. But anyway, we're really close to that 155 level. We closed around 160. We'll probably be up today with the market being strong again. But that's at a pretty good level where we should get at least a little bit of a bounce. Now, one of our friends from China asked us last week about the new stock that was the, I guess, the equivalent to Alibaba. I'm not even sure which one it was. It was called NEO. And anyway, we were saying wait for the ABCD correction to occur. That was on the last week. If you'll notice that we were up around 12.5 when that happened. And now what we're looking at is the market to come down to this. Sarah, get that, please. It's Nikki. If you'll take a look at this here, you'll notice that we got right down to it at $8 a share. So that's the place to take a look at it, and then we'll be able to see if it's going to rally from this level. But that's, you know, if you want to handle IPOs, that's the best way to look at it, as near as I can tell. All right, let's talk a little tiny bit about this stock. This is the soup du jour of yesterday, which is this marijuana stock, TLRY. The low we had on this stock was down around 96. I want you to see the ABCD pattern that went up right up to almost $300. It missed it by $2. The market then broke down to a 78% retracement, and then last night you'll notice that it rallied up to a 61% retracement at 249. That sets up a move possibly to 106. We'll follow that one also. Now, the Apple, nothing's really changed on the Apple. We're still waiting to see it get down. We came very, very close yesterday to our Apple price. Just give me 1 second here if we can get it up the right way. Oh, I don't have the Apple updated. That's not important what's going on anyway. Because, oh, here we go. We do have it updated. Let's get it right here. Here we go. And here's the Apple we were looking at. And we were looking at that price around $214.50. We got down to $214.99. We got up to $218. That gives us a price objective on the 61% retracement, up around $223 if we get it to that level. So keep an eye on that one. I'm going through these just to give you folks an idea that some of these things do have some really good bounces off these key Fibonacci points, and they're only predictions, folks. There's certainly not certainty under any stretch of the imagination. So we have now cleared above the high in the S&P at the 2917 level. That officially, from the S&P standpoint, that officially says that one is not working. However, the Dow Jones, which we're not interested in anyway because it's only a few stocks, but the NASDAQ is still what we believe is still in a bearish mode. You can see what you're looking at here in the NASDAQ. Oh, it's at 220 already, so it's pretty close. Thank you, Terry. It's only, what, a buck away. Okay, anyway, here's the NASDAQ on the hourly chart over the last few days. Now remember, the Dow Jones, the reason why, folks, the Dow Jones is so strong is because of the banking index. The banking index stopped exactly at a 61% retracement just 2 days ago. And remember, Goldman Sachs had been down 13 days in a row. And that was enough to even think it was going to rally. What did it do? It gapped up $2 and ended up being up 7, and that was over 100 of the Dow points. So that's how these things move. The overall general market, the New York Stock Exchange Index, is not actually making a new high as of yet. It will be soon probably, but as of yet, that has not happened. But there's other things that I think that we need to cover here this morning that I think are relatively important. Let's look at what we were looking at this week coming in. One of the things that we were talking about in the newsletter last week was the fact that we were looking for the U.S. dollar index to come down below the 94 level. You can see it here. This is where we were last Friday, and I believe where we are now is we're right down here near that 93 level, if I'm not mistaken. I saw a price earlier that it was very, very close to that price, so that's very, very close. Now, if we take a look at some of the other ones that we're looking at, this is the one that we were watching really closely because of the fact that the Brexit meeting is today, and we were looking at the British pound. And as you can see, our point D there on this move would come in right around the 133 level. And so far this morning, I'll put this up to let you see what's happening. Here's the Brexit so far. I don't know if they've come out with anything from Salzburg, Austria or not, but the high so far in the British pound this morning has been 132.99. We're trading at 132.85 right now. So that completes that 76% retracement, but that doesn't mean it can't go any lower. Thank you very much, Marshall. The dollar index, 93.40. We were looking at 93.30, so that's very, very close. The euro is doing the same type of thing, folks. The euro has had a very bullish bias, and it continues to go higher. And the $64 question is where we stopped this morning was very close to a real interesting spot here. Let's get it up here on this 4-hour chart so you can take a quick look at it, and then we will take a look. We're going to have, hopefully Stan Harley will be our guest tomorrow, and we'll see what's going on. Anyway, you'll notice the ABCD structure. We're right now, so far, what we've done is we've made the 1.27 expansion of the range that we had back in August. That comes in at 117.72. That's been the high. I don't know where it's trading right now, but we'll keep an eye on that. But it's also one that looks really interesting. Also, if you recall, we were looking at a couple of things with the Japanese yen, and the Japanese yen did exactly. It hit it to the exact price. We'll get this up here, and we'll take a quick look at it. You'll see that we hit that spot on in the Japanese yen. So these currencies they're running running pretty good. Anyway, the high on that Swiss currency was 152.50, and we're trading at 152 right now. So whether that is high or not, well, we're going to pay a few bills here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has just launched a Tiger Dollar sale for one weekend only. Through Tuesday, September 18th, you can get up to a 50% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN newsletter or service. TFNN has a new website launching in the coming weeks, and to celebrate, we're having a Tiger Dollar sale. For all the details and to get up to a 50% bonus on your Tiger Dollar purchase today, visit the front page of TFNN.com before this sale ends Tuesday.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, before I get into the interest rates, I wanted to talk just a little bit about that. I posted a chart on coffee on Monday, getting ready to see that bottom down at 95. The low was 94.95. We're now trading well over $1,000 up from that level. Folks, I can't tell you what to do. You know, all I want to do is show you the pattern. You've got to make your own decision. It's your responsibility. Give a pretty good idea on the stops. We said at about a 2-cent stop, which would have been $750. It's now up, you know, well over 130% of that, so you certainly want that to go to a loss, but at least it started working, you know, in the right direction because it's up 2.5 cents today. But when I post these in here, folks, I'm just showing you what I'm seeing, and a lot of times these patterns don't work. Sometimes they work, sometimes they do, and they don't, and that's what you have to do is you've got to decide what your risk factor is. So anyway, we'll see what's going on. We've got a few minutes here before we come to the big break. I need to cover something that I think is relatively important to all of us. I want you to take a look at the long-term chart of Treasury bonds. Let's just take a look at this. Just humor the old man. Stay with me here for a little bit. If you look back here in March, 2 years ago, we were trading at around 178. That's when they switched over the contract that year, because the high had been around just under 170 when they switched that contract over. Because of the specifications, it went a little bit higher. You'll notice that it made two 1.618 expansions there. This is a weekly chart. So that was a absolute major top, and then the market came down into 2017. It rallied up to a 382 retracement into September of last year, and now we're looking at a possibility of a 126 handle on that ABCD pattern. If you'll notice, on the weekly basis, which we haven't been able to update that, we'll do that over the weekend. We've now broken below the 140 level. In the spot Treasury bond, so that tells us that that was also a 382 retracement of the high that we made in September. The rally was getting less and less, and now, as you can see, we're getting ready to look at higher interest rates here, folks. Now let's just, you know, we hear about, you know, the Federal Reserve, and they do a wonderful job for us and everything, but let's just look at what's going on here. I want to show you we're going to take a little free trip here down memory lane, and everybody gets to go go across the pond into Australia and Switzerland, but I want to show you the different rates here. Take a look at this. This is the 10-year government bond from the United States. We're trading above 3. Look at these. Interest rates have gone since August, folks. They've gone from 280 to 305. That's a big move. Now let's keep going. Let's just move on. Let's go up to see our northern neighbors up there with the loonie, and that is the Canadian dollar. What are you going to do? You're going to see higher interest rates. You see how the rates are going higher? That means that bonds are going lower. That's not a very good sign. Now we continue on with our trip, and now we're going to go across the pond over to the UK, and we're going to be looking at the price of the Treasury bonds over in the UK, and here they are at 156. So that's 1/2 of the value of a 30-year U.S. Treasury bond. Why would anybody do that? Why wouldn't you buy a U.S. Treasury bond when you can get twice the interest rate that you can in a UK? That's beyond my pay grade, but let's take a look at it. All right, let's go over to the Deutschland. We're going to take a look at Germany now. And then you're going to see what's been happening to rates all this time. Rates have been going up for a long time, folks. You know, well, you can see from the weekly chart, they've been going up a very long time. And yet, you know, you're hearing all this stuff about quantitative whatever, and that's what happens. Who knows? All right, let's go over to Swaziland, over to Switzerland, and you'll see here the same thing. You see interest rates in Switzerland. What are they doing? They're going up also. Interest rates are going higher, boys and girls. This is just the beginning. Let's go to Australia. That'll end our trip. Everybody gets a first-class ticket home, and we'll bring this up, put it up right here. And now we're going to go to our good friends at the Federal Reserve that's been telling us about the interest rates. And let's just look at the short-term rates. This is the high yield comparison. I want to show you where we are. Just you'll see what's been happening to rates. And you'll notice, there you go. And look at this, folks. This is in a period, look, in 2016, we were at 0.6, and now we're 2.8. Hello. And what has the stock market done? Straight up. That's pretty much what you're watching. I don't know, Marshall, if the debt market is collapsing, but you have to pay attention to that. And one of the things that I do each week in the newsletter is to compare the high yield bond market, and boy, for the life of me, I can't find the darn chart on it today, but I'll get it up here maybe at the break. But this tells us that interest rates, you know, are going to go higher most probably. So we'll see. That's it. But we're having some big moves here. I want to show you one here today, folks. It's really interesting, and that is the shucks, it's the wrong chart. Boy, I had so much ready to go here, and I'm afraid I'm going to miss some of it because I've had too many things to cover this morning that are just very, very important. And the next one I wanted to cover, here's what I want to. Here it is. I've got it right here. Sorry, here's the high yield bond. I put it together with the 30-year Treasury so that you'll be able to see it right here. There's where we are in the 30-year Treasury. You can see the bottoms. You can see how that's making new lows. Look where the high yield bonds are, folks, the junk bonds. People are scrambling for yield. So what are they doing? They're buying junk. That's against what Bernard Baruch said. Don't be concerned on the return on your money. Be concerned on the return of your money. So we'll see, you know, what's going on. Anyway, we've had a huge move in this Australian dollar. And that's been a really, really big move. It's a couple $1,000 here just in the past 8 or 9 trading days. As you can see here, we made that big ABCD pattern down there, just a little bit below 70. We hit almost 173 this morning, and 172.80, 86 was the high. So that completed a perfect ABCD pattern. And we'll see how that continues to be moving. So these interest rates, we're so oversold in interest rates, we could easily get a rally. But longer term, folks, these are looking very, very bad. Just look at the short term. This was from Friday, folks. Look at the Treasury note market coming in this week. I mean, we broke below the 78% level. We've now taken out the lows of May. This is a very negative. Interest rates are going higher. So how do you factor that in with stocks? It's very difficult because the reason is sometimes they go together, sometimes they go opposite. They've been going opposite for weeks and weeks and weeks. But that happens. I mean, that's oh well. Just like you remember the three, well, I better not get into that. All right, let's move on to one of the other questions that someone asked me was about the live cattle and hogs. Folks, those things are moving really good. Hogs and cattle still going higher. We've run into a little bit of resistance here in the December cattle up around that 118 level. We've been actually been there. This was from Friday. We've been here all week long. This is Thursday. We got as high as 118.35 on Friday, and we've been here all week long up at this level at 118 in the things. The hogs continue to go higher, but we'll continue looking here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to walk through, I covered this in the newsletter, but because I thought we had a chance for a rally here. If you look at this banking index, as you can see, we stopped exactly at a 61% retracement of the low in July. It was also a 1.27 expansion from the low on August the 13th. We've had a really strong rally here yesterday, led by the leader of that pack, which is the Goldman Sachs, which has been the biggest leader of that group. You can see that that was, I believe, I don't remember exactly how much it was, but it was the biggest I think it was well over 100 points in the Dow Jones from that yesterday. We'll see if that was going to be the case or not. Yeah, here it is. You can see it here. It was over 100 of the Dow points, I believe, yesterday, someone mentioned. And, of course, when you got the other ones, you know, you add that to it, it's quite a bit. That was, you know, one of the things that we were looking at. Another thing that we were watching, of course, was the three-drive pattern that we were looking at in the EEM, the emerging markets. We had a really strong rally in that one also. It started late last week, and it went up. That's why the Dow is, you know, screaming, because of these banking stocks have been hammered so badly. I mean, Goldman Sachs had been down 13 days in a row, which in itself makes a very unusual pattern. So that's one of the reasons why we're looking at. So we'll see what's going on here with this. But we're hitting some key numbers here today in the U.S. dollar index, the British pound, the Australian dollar, and also the euro. So this is going to be a very interesting day today. Yes, sir, Marshall, that's the one. I know somebody's sitting in the next room here that's smiling on that one. So, Sarah, you've got a cohort in the Australian dollar. Marshall said to say hello. Anyway, it's moving the way we expect. Anyway, let's take a look here at another thing that is making these things move quite a bit. And that is the S&P has now taken out that high. Now, we have not done that in the New York Stock Exchange Index. I'll put this up here. All we're going to do, we haven't even taken out the high from 2 weeks ago yet in the New York Stock Exchange Index. However, it could be doing that. Yes, the corn has a really good chance here, Bob. You know, we've been talking about that. Let's bring this up here real quick. I hate to get off the subject, but we went right down to the old three-drive pattern. We missed it by about a penny, and now we're starting to move up. The wheat's acting really nicely. That's been a really good mover to the upside. And if you bought the soybean oil, those of you in the 24/7 service, you know, that's acting nicely. So keep your stop right under that low. So you bought it right near the low. It's 2 cents off the bottom, which is only $12. So your risk there would be break even on that at the most. You don't want to risk anything from that level. Now, just give me a second here, because the market's opening and the lights are flashing. I want to see what's coming on. The gold's hitting a very interesting spot here, folks. If you remember from just a day or so ago, we were looking for the gold to get up around to that 1285 level. Excuse me, right around 1212 to 1215. We believe we're going to get right around 1214. Let's just get this up here so we folks can all take a look at it at once. Give me 1 second here till I can put the numbers in, because we are right there, just about very, very close. And then we'll put this up and take a look at it here. And the silver is also moving nicely. We're above. We're getting really close in the silver, up around that 1440 level, and that's a pretty big move. So these are moving a little bit higher here. So we'll pay pretty close attention to this. And of course, the stock market is moving pretty nicely. Hold on 1 second here till we get this set up correctly. Oh dear, I almost lost that one. Give me a second here. Okay, let's move on. Let's just get this Australian dollar up. I want to show it to you just a little bit on a shorter term basis, so you'll be able to see what it looks like, because it has a very interesting pattern here. And we'll just put this up here so you folks can take a quick look at it, because we are finishing an ABCD pattern here also. Give me 1 second to get it drawn in, that you'll be able to see it. And again, you'll see that really nice three-drive to a bottom that occurred back on September the 11th. And it's, well, you know, Steve, you're all right. You know why that is? Because currency is money, and as old Bob Woodward and Charles Bernstein said, follow the money. And that's pretty much what you got to do in these days and at this day and age. So if you watch that money, that'll probably give you a pretty good idea, except for stocks. All you have to do with stocks is to buy them and watch them go up. That's the only thing that you have to do. So we'll pay pretty close attention to some of these things as we go on. Now, the NASDAQ came with it. Wow. NASDAQ came within 2 points of the exact 78% level and has already dropped 20 handles. Holy cow, what happened there? Ooh, I see why, because the S&P dropped a half a point. $50, and the NASDAQ drops 400. That makes good sense. Anyway, let's move on here, and someone's got a question about is it a new high, Gator, in the Dow Jones Industrial Average? I certainly hope so, but I don't think it is. Is it up over 200 points in the Dow? I think it has to be up 211 to make a new high in the Dow Jones, and I'm not really sure. Give me a second, and I'll pull my data up here, and we'll get the old data up, and we'll see if we can do this real quick. Oh, you know what? By golly, buckaroo. You're absolutely right. We made a new high in the Dow Jones at 26,000. The old high was 26,616, and we're 26,619 right now. So that is a very interesting one, and we'll see how the rest of them go here, but we got to pay close attention to them in here. You know, I don't get excited about markets too doggone long, too often, but these markets, they're flat out exciting. They're hitting some really great numbers here and some great patterns. So I think we got to pay really close attention to them this week, especially the letter this weekend. We've really got to do some work because we hit all those currencies spot on. The gold's doing what it's supposed to be doing. We even had a really good rally in crude oil that stopped relatively close to where it was supposed to. We weren't involved in that one at all, but it's certainly interesting where we are right now in crude. Let me get this up here so you folks can take a quick look at it here, because it came really close to some numbers. It's got a lot of stuff on it. I don't want to take these off because I need them for analysis, but I want to put these up here to let you folks take a look at the crude oil. We'll be able to see it. Yeah, I get my $27,000 hat on. Hey, Maria, if it gets to 27,000, I won't need a hat. No, no, it's okay. I'm not involved, so I'm just once the S&P went above 2917, that I mean, if you're in the Russell, you're doing great. If you're in the NASDAQ, you're still doing great. But if you're in the S&P or the Dow, not so great. So that's the whole key. You have to figure out which one of these you're going to be trading and stick with that one, because those are the ones that you really need to keep watching for sure. That's neither here nor there, but that's what we look at. Okay, let's see that Micron Technology is up today strongly for our good friend Mr. Z. And let me get these others lined up, and then I'll answer a question here. Another question. Folks, I am flat. What I'm going to do here from now on is I am not going to put trades on here, and I'm just going to give you, I'm going to post a chart, and you decide what you want to do, because I can't answer all these questions. I can't tell you where to add or where to get out, and these are beyond my pay grade.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I just got some great information from one of our good friends not too far away from here over in the gambling capital of the United States. And he's saying here that trading is not a one-size-fits-all business. Everybody has their own risk tolerances and objectives. So put that on your computer and use that. Because when I post a chart in here, you have to decide whether you want to be a buyer and a seller, because the buyers and the sellers can be different fellas. And you got to be really, really careful in here. We did make a new high in the Dow Jones Industrial Average today. We have not done that yet in the NASDAQ. The NASDAQ just made a 78% retracement off the high of last week, not just off the high, but that's neither here nor there. They're rolling these over. The bank stocks has been running this Dow the last 250 points, and that is mainly because I'll be happy to put that up for you, Mike. Mike wants to take a look at the IWM, and we'll see where we are with that. When things are happening like this, everybody thinks I know more than I do, which is always a sad thing to think about. But as you can see, oh, look at this. Boy, if you want to sell something, folks, God, this, boy, if you want to sell something, this is the one to sell. Look, thanks, Mike. I hadn't had a chance to look at it. Look at this. Look at this. This is not even up on the day. I mean, this made a 61% retracement on Friday, and we've been down all week. This is the Russell 2000. This is all below. Well, let's move on to the next one. Thank you, Mike, for bringing that to our attention. I think it's really important to, to pay attention to that as we go through here. Now we've come back. We went all the way down. We dropped 25 points in the NASDAQ, and we came back and made new highs. And now we're hitting the exact 78% level. We just hit it at 2582. So let's see. Boy, that's good action, folks. We go to 2580. We drop all the way down to 2552. We dropped 30 handles and then rallied 30 handles. We rallied 60 handles, and it's only been open for 16 minutes. That's the kind of action you like to see. Have to love that. So we'll see what happens with the rest of the day. But this is good to see this kind of movement. This is fun stuff. I like this kind of thing to look at. All right, let's move on here with some of the other things that we're keeping an eye on. Let's see, the euro is still below the 1771. The pound's still down a little bit. The Australian dollar's starting to move down a little bit. And the S&P, we'll take a look here in the S&P. We've got a couple of targets up here if you want to look at targets, because we're into new high ground here. We're almost at that secondary level here right now, which is, we hit the 1.27 at 29.30, but I think we could probably get a tad higher than that given the emotionalism of the first part of the market here. And yeah, we're 29.29 right now. Once we went above 29.19 in the S&P, even though the rest of the markets are not acting that way, just because we sold it good, folks. We sold it at 29.15. We dropped 30 handles. We got all the way down to 28.82. Some folks took some profits down there. That was an exact 61% retracement, and that ABCD structure measures here to 2932 this morning, so we'll see. But we did make a new high in the Dow Jones, and we're still going higher, so that's another interesting one to sort of keep an eye on this morning. Okay, let's move on. Another question that someone's asking is about Deutsche Bank. I posted the chart for Deutsche Bank. As you can see in here, the market for Deutsche Bank stopped right at a double bottom. I'm going to put this up again because I put the darn thing out of, someone was asking me too many questions at one time and I was not able to do this, but I'm going to bring the Deutsche Bank chart up again so that you're able to see. It gapped up this morning again, but here you'll be able to see the Deutsche Bank chart clear, that we made a double bottom at the 78% level about 5 days ago. Then we've been going up ever since, so we're having a little bit. If we get an ABCD rally up in this to around 14, I still think it's a sale, because this doesn't look good. I mean, when you offer a 35% discount back in January to buy the stock and it drops by half, boy, that was really a great discount. Don't do things that look too good to be true, they say in the trade, so let's keep an eye on it as we watch some of these things here. Okay, one other question someone's asking me about, and that is, hold on one second here, we'll get this up and take a quick look at it, and that is the Hong Kong market. Just give me a second here, because we've had this big move here coming here on the Hang Seng. I'll post it twice for you so you can take a look at it. This was another reason why we thought that market we were going to get some rallying in here, because we had 3 drive to a bottom pattern, and that has held up extremely well and has continued to rally. In fact, as you can see, if you just check the prices, you'll see that we're trading at 27,500. So we rallied another couple hundred points, in this move as we see it unfold right here. Here it is right now. I'll just bring it up so you can take a look at it. You'll see that the Hang Seng also rallied up above 27.5. We're trading at 27,477 right now. So we'll watch that one also. So we'll keep figuring out what's happening with it. Anyway, that's what we're watching this morning, and we'll be neither here nor there and see if they keep going. Okay, only 2 more minutes to go. Boy, when you're having fun, the market's really moving a lot. All right, give me 1 second here to check what's going on in some of these markets, because when I'm doing the show, I can't always check, and let me double check some of the things. We were at 29.29 in the S&P. Windows, let me get this straightened up. Let me see, the NASDAQ is still right around 2075.80, and the gold, we got up to 212. We're trading at 210.70. 212 was within that zone between 212 and 214, 213.90. We were watching that. The euro is now off 25 pips from its high. The Australian dollar's coming down a little bit. So the dollar index at that 93.29 level looks like it's pretty interesting. The Japanese yen got all the way down to the 112 level after hitting 112.50, and that's pretty much what we're keeping an eye on here this morning. So we'll see if these continue to go, folks. If you're in the cattle, I would be out of all December and October cattle today. Those have completed those big patterns. Those have been big moves, and we certainly owe it to our good friend Rich Anderson and also to Mr. JC, Mr. Z in the room. He did a fabulous job for us, and on following that. And then the hogs are still looking okay. They're talking about more problems in China with something called TikTok, whatever that is. But it looks like we got another 6 or 7 cents to go in the Christmas hogs based on what the chart patterns look like. So I would keep a close eye on that one. I think I can post that one without too much trouble. Let's just get this up here and take a look at the old Christmas hogs. Yes, here we go. We're way above. This was as of Friday, and we're trading above 58 up in here. The wheat still looks good, Mike. We hit a really nice ABCD pattern in it yesterday, as you know, right around the 524 level. We got to 5.23 3/4. We backed off, 8 or 9 cents, but it still looks good to me, and Sim only still likes it too. His is more fundamental than mine, of course, but it's acting like it is holding up relatively well, so we'll see. So let's take a break here. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the chart of that British pound in there for 2 reasons. One is they have the Brexit meeting there in Salzburg, Austria, and it hit the exact number, 132.99. We're down about 30 pips from that level, so if you sold that level up in there that we were suggesting, put your stop just a few pips above it, basically being a risk-free trade, and I would do the same thing in the soybean oil because you're risk-free in that, and that's acting okay. The coffee, if you bought the coffee, it's really moving, so I would put a break-even stop on that too because it's moving very quickly. I recommend getting out of the silver on a trailing stop. If we go below, 14.31 in the silver, in Christmas silver, let's double check because 31 would be the area where I would be exiting that. mainly because of the ABCD patterns, folks. Longer term, I'm incredibly bullish this stuff, and it just hit it. So I would be out of the silver now. Now, silver did not make a new high, folks, today when gold did. That's another negative thing. So I would certainly lighten up on the silver and just keep an eye on that anyway, but that's what we're watching. So those are the ones that we're looking at. From now on, I'm just going to post these charts. You decide, whether you want to buy or sell, how many you want to buy or sell. You decide whether you want to do that or not, because, I am not in the hand-holding business. I quit being a broker back in 1982 and don't want to do that. And it was fun, though. Gosh, I had a lot of fun. But anyway, that's what we're watching in some of these things. This is a key day. The fact that we had all these numbers in the currencies right out of the box and for different reasons. Brexit was a different reason than the yen. The yen is different than the euro. The euro is different than the pound. And the Australian dollar is different than all of them. So those are the things that we're watching. So we'll just pay attention to that, and we'll go from there. 877-927-6648. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.